Hello, everyone, and welcome to the second how-to session for analyzing entries in annual confidential financial disclosure reports, or OGE Form 450s. My name is Megan Kunkel. I am an instructor with the Institute for Ethics and Government here at OGE. And in this session, we are going to analyze common entries on OGE Form 450s that may prove sometimes challenging for both reviewers and filers. And those are college savings plans and retirement plans. As a reminder, the types of entries we are analyzing during each how-to session are coming from you all in the ethics community. If you would like to share entries you have found to be unfamiliar or challenging this filing season, please complete the one-question survey located at the bottom of the How-To Sessions course page. Now, this is the last week to submit your entries. We are going to have one more how-to session on Tuesday, March 10th from 1 to 2 p.m. Eastern Standard Time. And an announcement will be sent soon for you to mark your calendars for this live event. In the first how-to session, my colleague Patrick Shepard briefly introduced the confidential financial disclosure system generally. Before we begin analyzing today's entries, I want to recap two things that he shared. First, the goal of reviewing confidential financial disclosure reports is to prevent conflicts of interest. You want to keep this top of mind during the filing season. So for me personally, I often got bogged down trying to perfect the reports I received, making sure entries were reported exactly how the guide told me they should be and how I thought they should be. But the end product is not the appearance of the report itself necessarily. It's your analysis of what is reported, whether you can confirm from the information that there is no potential conflicts of interest for the filer in carrying out their work and then certify the report. Also, you likely have filers who are not comfortable reporting their financial information or that of their family members. And regardless of these reports being confidential, it's still very personal information filers are being asked to share. Acknowledging this and letting filers know why they're being asked to provide it, that they too know the goal to prevent conflicts of interest, can help you build rapport with them. So we'll talk more about other ways to do this throughout today's how-to session. Patrick also shared this approach to reviewing OGE Form 450s, the 222 approach. It sets out the info you should have, the resources you will need, and the two questions you should be asking yourself as you conduct a review. So first, at the top, you have two pieces of information. First, the financial holdings reported on the OGE Form 450, and second, the duties and responsibilities of the filer's position. Now, getting access to this information is not going to be as straightforward as what is reported on the form or the information that you receive from the filer. So it may require some back and forth with the filer or perhaps also with others in your agency to make sure that you have all of the information that you need. Now, for the resources, you have two pieces here, the Confidential Financial Disclosure Guide and the Analyzing Potential Conflicts of Interest collection. So we're now going to pull these resources up so that we have them handy as we review the entries in today's how-to session. So first, you're going to want to go to OGE's website at www.oge.gov. And you want to focus here on the Resources for Ethics Officials tab. And then you'll go to, first, for the Confidential Financial Disclosure Guide, the Financial Disclosure page. On this page, you're going to want to scroll down past the public financial disclosure resources, because maybe you don't need those just quite yet, all the way down to the confidential financial disclosure resources. And you'll see here a link to the Confidential Financial Disclosure Guide. It's the first link under Guidance. Okay, so we're going to click to have this open. You may wish to download this to your computer so you don't always have to come to our website to retrieve it. If you do that, just a heads up, you want to always make sure that you're using the latest version. So you can see here the latest version is from October 2023. Right now, let's find our conflicts of interest analysis collection. So we're going to go back up to the top. And again, we're still within this Resources for Ethics Officials tab, but we're now going to go to the Conflicts Analysis and Resolution page. And we're going to scroll down again to the resources, and it is the first one linked to at the top of the resources section. And I'm just going to leave this open for now, but if you do come to this page and you seem to frequent one or more of these documents, you could click to download them and have them handy. But for today, I'm just going to leave this open as we may need to look at a couple of different ones. All right, so we have our two resources open, and now we have two questions that we needed to keep top of mind as we're reviewing OGE Form 450s. And that is first, is there a nexus? Is there a connection between the filer's duties and the entries on the form? And the second is, do we have enough information to determine that an entry will pose a potential conflict of interest or will definitely not pose a potential conflict of interest? And you'll see here that this question does not allow for any daylight between these two determinations. So if you cannot answer either of these definitively, then that means you need to go back to the filer for more information. Okay, so we have our two resources handy and our two questions to consider. So let's begin reviewing an OGE Form 450. During today's session, we're going to be analyzing different types of savings plans and investment accounts filers may have for educational and retirement expenses. Here we have some of Edward T. Ethical's Part 1 Assets and Income entries. Now, you may already be thinking of some questions you have for Ed, which is great. We're going to go line by line. So we'll start with the first asset he has listed, and that is 529 Cynthia. So the 529 indicates that this is likely a 529 plan. But let's first see what the guide has to say about those. So first, I'm going to go to the guide. And I find it helpful to start up at the top. So then when I do my Control F search, it goes through the guide sequentially. So we'll start in the table of contents. So I'm going to just type in 529. And it looks like it takes us to one entry here for college savings plans. And I click this down arrow, it'll show me the next option. Okay, prepaid tuition plans. So it seems like there are a couple of different 529 plans. So from the guide, we know that there are two different types of 529 plans. Now, for your awareness, several states have closed their prepaid tuition plan programs in recent years. I want to say maybe 9 still have them. So you may see less of these going forward. College savings plans are more common, and they are generally state-sponsored, and individuals choose among various investment options. So these often consist of portfolios that invest in mutual funds. Individuals may be able to build their own portfolio or choose a target date style portfolio to align with when their child will enter college or have significant educational expenses. Okay, so let's see. We have these two types of plans. We don't really know which one to look at, right? So we might need to go to Ed and ask, which kind of 529 plan do you hold? So let's say we give him a quick call and he indicates that it is a college savings plan. Okay, so now we can focus our research in the guide on college savings plans. We'll just scroll back up and then you can click on it within the table of contents. and it will take you to that specific section. All right, so we see here a college savings plan is a type of qualified tuition program in which an individual chooses among various investment options, often consisting of portfolios that invest in mutual funds. And we can see the different reporting requirements. Right? So we see that in part one, the filer must report a college savings plan if the value of the plan account was more than $1,000 at the end of the reporting period. Annual filers must also report a college savings plan from which they received more than $1,000 in income during the reporting period. So that income would come about if the funds are withdrawn. And the filer must provide the name of the sponsor and identify the interest as a college savings plan. So they have to be very specific about what kind of 529 plan this is. And the filer must also report each underlying asset that individually was worth more than $1,000 at the end of the reporting period. It says here that most investment options within college savings plans are portfolios that qualify as accepted investment funds. Okay, so we'll come back to that term in a little bit. So after reviewing the guide, we know we need more details about this college savings plan because all we know right now is that perhaps it is for a person named Cynthia. So here are some follow-up questions that I have for Ed. Right, first, who sponsors it, right? We need to know, particularly probably in this situation, which state is sponsoring this college savings plan. What does it contain? Because we do need to report any underlying assets. And here I've gone into some detail about the college savings plans consisting of portfolios. And then the last question is for him to let us know more about the income that he might have received. So if he withdrew any money from this college savings plan. So I find it helpful to give filers additional info to better explain what is needed. So to guide them a little bit more and to reiterate certain requirements. You'll see here I reminded him of those reporting thresholds of $1,000. And also the same for the income that is generated. And I prefer to send follow-up questions like this via email so the filer feels less on the spot and also can review their financial information to retrieve what is needed at their convenience. So again, they're not having to do it in the moment. Maybe they're in the middle of meetings and then they just feel very overwhelmed. I also like having a written record of the exchange. Now, this is a personal preference. Other ethics officials may prefer to talk through their questions with the filer, as this often will lead to more questions, right? And then you're able to kind of have that full conversation. But still, if you do have these conversations, make sure you document them so you can refer back to them when needed. And it's not here in my questions, but in my email, I might also let Ed know that he doesn't have to include Cynthia's name in his financial disclosure report. I'm imagining that Cynthia is probably Ed's daughter, and I've seen filers do this when they have multiple 529 plans to report. It often helps them to differentiate between their holdings, but it's not really helpful to you as a reviewer. And it's additional personal information they're providing that isn't necessary. And I feel that letting filers know about over-reporting and asking if they would like you to remove this information, I feel like that can really help you build rapport with your filers, especially those who are already a little uncomfortable with the requirement to file a confidential financial disclosure report or any financial disclosure report. And again, it shows you are actively reviewing reports and that you're respectful of filers' privacy. And explaining this over-reporting also helps your filers, hopefully, and you can remind them of this in years to come, how they should complete their future reports. And a 529 plan such as this will probably end up on their next annual report and the one after that for however many years that they need to have it established until they can withdraw from it. So hopefully this sets them up for success in future filing seasons. All right, so let's say Ed is very responsive and he got back to us and he let us know that his college savings plan is sponsored by Maryland. It contains a portfolio 2036, and there is no income for him to report. So he didn't withdraw any funds from the 529 plan during the reporting period. Now, although most investment options within college savings plans are portfolios that qualify as accepted investment funds, for which you do not need to report any underlying assets, you can take a closer look at their contents online. So, for example, we could learn more about Ed's college savings plan by going to the Maryland 529 website. And I'm just going to demonstrate how you might need to dig a little bit deeper into these kinds of plans. Now we have all of this at our fingertips, right? So if I just open a browser, I type in Maryland 529, it's going to bring me to the MD 529 website. And you can click around through here and look specifically at that portfolio 2036. So let's say want to view their investment options. You can see here they're showing portfolio 2045, say general information. Okay, it looks like T. Rowe Price mutual funds compose the underlying investments of each of these portfolios. So we know the portfolios are made of mutual funds. Let's view prices and performance. Okay, so here we see portfolio 2036 listed out in particular. So we could click here. And this is going to open up a plan description. And you can search for portfolio 2036. If you want to take a closer look at some of the mutual funds that it contains. I'll zoom in on this a little bit here. So you might have to do a little bit of digging for this information, but it is available to you. And this is important because you might need to sometimes do a deeper dive into these portfolios to see what they actually contain. But I had the privilege of already looking at this information, so I knew where it was. Might take you a little bit longer to find some of this sometimes. Okay, so Ed has given us some helpful information, and with this information, we can now update how this asset is reported on his OGE Form 450. Okay, so here we have the revised entry, MD 529 College Investment Plan, Portfolio 2036. Before moving on to the conflicts of interest analysis, I would like to address a couple of questions we received about 529 plans. The first was about still needing to report a 529 plan, even when none of its underlying assets appear to be reportable. And I remember raising this when I was reviewing OGE Form 450s as well, because it didn't seem to align with the reporting of other types of plans and accounts. For others, if the plan or account does not hold reportable underlying assets, then it doesn't need to be reported. However, 529 plans are structured differently. And bear with me, but this is the way that I picture it, and I need to create some sort of visual for this. But you can think of them as very carefully wrapped gifts. Okay, so the 529 plans themselves are the wrapping paper, the outermost layer. And when you unwrap them, you have the boxes, and these are the portfolios. Then inside the box is the tissue paper or the bubble wrap, and that would be the mutual funds. And finally, the gifts themselves, the individual stocks, bonds, or other securities held within those mutual funds. So because 529 plans have these multiple layers, and specifically a layer between the plan and the mutual funds, so they have these portfolios, this alters how they are reported. So the mutual funds themselves may be diversified mutual funds and exempted from reporting. However, the portfolios for most college savings plans are reportable because they are not themselves diversified mutual funds. So in this example, the MD 529 plan holds the portfolio 2036. The portfolio itself does not meet the definition of a mutual fund, so we report it, but the portfolio invests in various mutual funds. Now, identifying the 529 plan sponsor and the portfolio is sufficient because the investments of the portfolio, as we just saw, are readily available. And the portfolio itself might qualify as an accepted investment fund for which it is not necessary to report the underlying assets if those elements are met. If, however, the 529 plan directly held a mutual fund, so not through a portfolio, then that would be a different box, right? A different holding to report and analyze. So you really have to look at each layer individually as you are going through the reporting process. And I don't want to go on too much of a tangent here, but if you would like to take a closer look at the definition of accepted investment fund, because I've said it a couple of times now, it can be found on pages 32 and 33 of the guide. So I'm just going to go quickly there. And again, if you run into any terms in the guide that you're not sure you fully understand, do a Control F search and see if there's a definition available, as there likely is. Okay, so see here we have the definition of an accepted investment fund. And I just want to point out this cautionary language here. Okay, so you'll see this language explaining why these accepted investment funds are, or in our case, this portfolio is still reported, even though the underlying holdings are not. And that's because they do impact the conflicts of interest analysis. You can see that here from this first sentence, right? Qualifying as an accepted investment fund reduces a financial disclosure's obligations, so they don't have to necessarily report all of those underlying assets, but the underlying assets of an accepted investment fund are still relevant for purposes of the conflicts of interest analysis. So they are going to be important to see as we look at conflicts of interest, which we'll talk about momentarily. The second question was about noticing a change in the reporting of a 529 plan from the previous year. So although not common, some filers, particularly those with children close to needing the funds in these plans, or those with multiple children, they may make changes to the structure or investments of their existing 529 plan. As always, if you notice a change in reporting from year to year that you are not sure you understand, follow up with the employee to learn more about it. You want to make sure the filer is reporting thoroughly and accurately, and most importantly, that you have all the necessary information to conduct your conflicts analysis. Okay, so we now have the information we need to analyze this holding for potential conflicts of interest. So let's go to the Analyzing Potential Conflicts of Interest Analysis collection to see what guidance OGE has for 529 plans. I'm going to just switch the order of these because I always go to the guide first, and then I come here. And again, I'm just going to use Control F, and I'm going to type in 529. Okay, it looks like we have the qualified tuition program. It's included in the conflicts of interest considerations document for legal entities that hold assets. And up at the very top, I can again click on 529 plan. And it'll take me to that section. Right, so for 529 plans, we are looking at 18 U.S.C. 208, so the Financial Criminal Conflicts of Interest statute. And we can see here the college savings plan is an investment account in which individuals choose among various investment options, which often consists of mutual funds, right? Because the plan does not guarantee the value of those underlying assets, the employee has a financial interest in particular matters affecting the performance of the assets that have been selected under the plan. So that's why you might need to be taking a closer look at the portfolio and all of the things that it contains. And you can see this example here that very much aligns with ours for Ed. If the employee selected the age 0 to 5 portfolio, in our case, portfolio 2036, and that portfolio holds mutual funds, the employee has an interest in particular matters affecting those mutual funds. And so then you would need to take a closer look at the conflicts of interest analysis for mutual funds. And you can see here in the exemptions part that mutual funds may qualify for some exemptions. So we have the diversified mutual fund exemption and the sector mutual fund exemptions. You can follow these citations to learn more about those. And again, you can also go to the conflicts of interest document and specifically to the section on mutual funds. And this is actually a document you might recognize. It's the one that Patrick went to in the first how-to session in his discussion of exchange-traded funds, or ETFs. And so you'll just follow here to look more closely at the individual mutual fund that you are analyzing. And again, if you go down to the exemptions, you'll see more of a breakdown here of those exemptions for mutual funds. So that is our college savings plan. Now let's analyze the second entry, UPS retirement accounts. So the filer has identified the employer, which is helpful, but we still need more information about these accounts. Before we reach out to Ed, let's take a look at another part of his form to see if it reveals what these accounts may be. So it is important to read OGE Form 450s all the way through. Sometimes other parts can reveal important information and they can keep you from asking filers unnecessary questions, right? Unintentionally disrespecting their time. What is reported in other parts can also raise more questions. So you want to know the whole story, or at least how the filer has told it on their OGE Form 450 before you begin a back and forth with the filer with your questions. So we can see here in Part 4, agreements or arrangements, that Ed has reported participating in a defined benefit plan with UPS, and he's indicated the location, Seattle, Washington. So this might be one of the retirement accounts he's referring to in Part 1. Okay, so we have a specific kind of retirement plan here, a defined benefit plan. So now we can go to the guide to see how a defined benefit plan should be reported on the OGE Form 450. So first, we're going to go to the guide. My Control F box is open. Let's just type in defined benefit. This is why I like going to the very top because it always pulls you to the table of contents. But we'll click through here. Okay, there's the section on defined benefit plan. Okay, so we can see here that a defined benefit pension plan is a type of retirement plan that an employer establishes for its employees. And upon retirement, the employee receives a fixed annuity. The annuity typically makes biweekly or monthly payments to the employee for life. The annuity may also pay a survivor. Under some plans, the employee can elect to cash out. All right, so this is set up. The takeaway here, I think, for me is that this is set up by the employer, right? And then reporting requirements. Okay, so it looks like there's a reporting requirement for Part 1. Filers must report a defined benefit plan if the value of the plan was more than $1,000 or if they received more than $1,000 in income. So again, that reporting threshold. Filers must identify the employer and specify the type of the plan or the type of plan. And then there's a Part 4 requirement which we saw already in Ed's report, is that filers must identify the employer, the type of plan, and whether the filer will continue to participate. Okay, so according to the guide, Ed appears to have correctly reported his defined benefit plan in Part 4, right? He wrote that he will continue to participate in this defined benefit plan. But in Part 1, again, we're just told UPS retirement accounts, so it's defined benefit plan is not specified here. So we need a little bit more information here in Part 1 for this defined benefit plan. Now, since Ed already noted that these retirement accounts here were with the employer UPS, this is a pretty quick fix, right? So we can write in UPS defined benefit plan. And before we question the plural of the retirement accounts, let's analyze this UPS defined benefit plan for any potential conflicts of interest. So we're going to go back to our analyzing potential conflicts of interest collection, and we're going to Control F search for defined benefit plan. Right, and we see here that it's in the conflicts of interest considerations document for common employment interests. Again, at the top, you can click on Defined Benefit Plan, and it'll take you to that specific section. Okay, so here, probably already noticed that we have two things mentioned here. So previously, we've only really been looking at 18 USC 208. We also see here mention of 5 CFR 2635.502, and that is regarding impartiality. So here for the financial criminal conflicts of interest statute, we are focused very much on the employer, right? So under a defined benefit plan, the employer guarantees the targeted benefit level. Therefore, an employee does not have a financial interest in particular matters affecting the underlying assets held by the plan. Rather, the employee has a financial interest in particular matters affecting the plan sponsor's ability or willingness to meet its pension commitments. So, here, in holding this defined benefit plan, the filer has a financial interest in their former employer and whether they are able to continue to provide for them through this defined benefit plan. So they're going to be concerned about particular matters affecting the financial stability of the employer. And mention of impartiality here, I think really exemplifies why reporting in Part 4 is necessary. Because you see here that an employee will have a covered relationship with the sponsor of a defined benefit plan in which the employee participates. And that's because the employee has a business, contractual, or other financial relationship that involves other than a routine consumer transaction. So you're having a covered relationship with your employer because you are continuing to participate in this defined benefit plan. So therefore, when an employee knows that the sponsor of their defined benefit plan, so in our case, Ed, if he was doing any work that might be concerning UPS, then he would need to come to an ethics official to talk about that because he is continuing to participate in a defined benefit plan with his former employer, UPS. So that is defined benefit plan, but remember the filer reported retirement accounts, plural. And even if we think this might have been a typo, could have been a typo, we should still follow up with Ed to make sure that there are no other retirement plans in place with UPS that are not identified elsewhere. And so we would need to follow back up with Ed and ask this information. So let's say we give him a quick call to confirm. Um, Maybe we just want to say, hey, was this a typo? Is it just the defined benefit plan? Or do you have anything else with UPS? And let's say he reports also having a 401k savings plan with UPS. So, not a typo. Apparently, UPS has some fantastic retirement benefits. So, we can now return to the guide to see what information is needed for 401ks. So, we're going to go back to the guide and just going to search 401. Okay, perfect. So, it's right here. Mentioned as an example of a defined contribution plan. Okay, so let's look at this a little bit more closely. Okay, it says a defined contribution plan is a type of retirement plan that an employer establishes for its employees. So here we have UPS establishing this for Ed. And in this plan, an employee selects among mutual funds or other investments and makes pre-tax contributions to those investments with deductions from the employee's salary. And often the employer will make contributions to the employee's investments too. And then examples, which we have here, are for 401k. Right, and it looks like for reporting requirements, there's a requirement for part one, and we're used to this language now that they must report. Well, here it says report each underlying asset that was worth more than $1,000 at the end of the reporting period. So not just the plan itself, but the underlying asset. And annual filers must also report distributed income from a defined contribution plan that exceeded $1,000 during the reporting period. Filers, however, need not report underlying assets that qualify as diversified mutual funds. Okay, so we've seen that in the exemptions for the financial conflicts of interest as a possible exemption, right? Those diversified mutual funds. And then filers report the underlying assets following rules applicable to that type of asset. Okay, so here this is like one part that leads to another, right? So we're not reporting the defined contribution plan, we're focused on those underlying assets. And then for those underlying assets, depending on what they may be, we may need to go to different parts of the guide to see how they should be reported. And you can see some examples here of how a plan is reported. So we have the plan, underlying assets that meet the threshold, or just the reportable underlying assets. And then again, any income from any distributions. And it also looks like there's a requirement here to report in Part 4. Now, Ed didn't have this mentioned in Part 4, but it looks like filers do not need to report continued participation in a defined contribution plan maintained by a former employer unless the former employer continues to make contributions. So that might be something that we need to clarify with Ed. So, similar to the reporting of the defined benefit plan, defined contribution plans may need to be reported in both Parts 1 and Part 4 of the OGE Form 450. However, unlike the defined benefit plan, where we were solely concerned with the employer who established it, right, UPS, um, because they are responsible for its value, we are concerned here with the underlying assets of defined contribution plans because that is where they get their value. So this means we need more information from Ed about this UPS 401k savings plan. So we can send these questions to Ed. Again, I like to give additional information so filers can better understand what they're being asked for. And what's great is you have the guide and these conflicts of interest documents to pull the language that you need from them. So you can always rely on that language to help formulate your questions to filers or to give them a little bit more detail. So again, I've included links for Ed to read more about relevant reporting exemptions. I would also offer to help him with his determinations if he is unsure whether an underlying asset should be reported. So here I'm asking him, what does your 401 contain that was valued at more than $1,000 at the end of the reporting period? And then also for him to indicate if more than $1,000 was distributed from the 401k during the reporting period. Ed is very responsive. We've developed a good working relationship. He notes that only UPS stock is reportable for his 401k savings plan with UPS, and also that he received no distribution. So there is no income to report. Now, with this information, we can further revise his entries on Part 1. And I want to point out there are a couple of different ways you could do this. You could have Ed include mention of the 401k savings plan and that it contains UPS stock, or you can just report the UPS stock because here the requirement is just to report the underlying asset, not the plan itself. Because we're not so concerned with the employer here, but those underlying assets and their value. It just in our case, it just so happens that the employer is also the one who holds the stock option here. So there's still mention of the employer, which is going to be important for our conflicts of interest analysis. So remember, we may also need to revise Part 4 of Ed's OGE Form 450, as he did not report his 401k there. And remember, in the guide, it said that filers do not need to report continued participation in this kind of plan maintained by a former employer unless the former employer continues to make contributions. And so we might need to follow up with Ed and just double check, right? Was this an oversight? Did he mean to report it there? Or does UPS no longer make contributions to his 401k savings plan? Now, of course, this question could have been part of the initial batch of questions sent to Ed, but sometimes staggering questions can also help you avoid overwhelming a filer. Sometimes if they see a very long email, they might think they don't have time for that, and then it just kind of gets pushed down further in their inbox. So it may also be helpful in this situation to keep a conversation going with a filer to show your responsiveness and thoroughness. So it is good to have that back and forth. But in this case, the answer is simple. UPS does not continue to make contributions to Ed's 401k savings plan. So Part 4, the way that Ed has it reported here, is okay to leave as is. Now, let's return to the collection to review OGE's guidance on analyzing defined contribution plans for potential conflicts of interest. Okay, so we're going to go back to our collection. And of course, we could probably assume that the defined contribution plan is in the same document as the defined benefit plan. So we can go ahead and have that open. And I'm just going to scroll down because it's actually the section just below the one we looked at. Right, so we have here mention of 18 USC 208, right? And these types of plans, this 401k plan, is a type of retirement plan that an employer establishes for its employees, but the employee selects various investments. And these could be mutual funds and other investments. Often the employer will make contributions to the employee's investments. But here, a federal employee has a financial interest in the particular matters affecting the assets held by the plan. And you'll see how this really aligns with the guide and how it requires these things to be reported. because the emphasis here for defined contribution plans was to report those underlying assets. And that's because the conflicts of interest analysis hinges on the value of those assets and what they are and how they might be connected to the employee's work. So you'll need to analyze each asset using the guidance appropriate for that type of asset. So in our case, we're going to be looking at UPS stock. So we might want to go to the stock entry in the conflicts of interest collection. If it was a mutual fund, we would want to go to that document to take a closer look at that language offered there. And actually, our specific situation with Ed is pointed out directly here because I think this is a pretty common occurrence. It says some plans offer employees an option of investing in the employer's stock through the plan, which would create a financial interest in the employer. Okay, so here, there's not really any separation of the plan from the underlying asset because the plan, which was established by UPS, is also part of the underlying asset that is reported. So with UPS, the employer is implicated in both situations. But again, it gives this cautionary language. The analysis of defined contribution plans is always the same. Look to the underlying assets. You want to take a closer look at those underlying assets. Now, part 4 would discuss whether an employer's contribution is still if an employer is still contributing to this plan. So then you would see here the employee has a financial interest in particular matters affecting the employer's ability or willingness to make the employer contribution. So again, if they're still contributing, then you're concerned about their financial ability to be able to do so. So you would have a potential conflict of interest here with the employer. But again, with defined contribution plans, you really are looking at the individual underlying assets. So looking at this language alone might not be sufficient. You might need to go to other parts of the collection and take a closer look at the language there for stocks, mutual funds, etc. So unlike the other assets we've discussed so far in these how-to sessions, these retirement plans may require reporting elsewhere on the OGE Form 450. Defined benefit plans always do, and reporting defined contribution plans depends on whether the employer is still involved. So this is a reminder to review OGE Forms 450 in their entirety, as the pieces of information reported in each part impact the conflicts of interest analysis. So in this case, both of Ed's retirement plans are associated with UPS, and the 401k holds UPS stock. So the employer is already being considered in the conflicts of interest analysis. However, if Ed only had the 401k and he sold the UPS stock, then UPS would no longer be part of the analysis, and you would need to be considering any other reportable underlying assets as part of that 401k plan. Although we cannot address every type of entry you may encounter on annual OGE Form 450s this filing season, we hope this how-to session leaves you feeling better prepared to analyze them. Remember, rely on the guide and analyzing potential conflicts of interest analysis collection. They contain lots of information to support you in your reviews and in your communications with filers. Decide what forms of communication work best for you and your filers to share and record information and to build rapport. Being consistent and keeping good records can also help you and members of your team in future filing seasons. And lastly, review OGE Forms 450 in their entirety. They tell a story. And you don't want to skip parts, especially because doing so can impact your conversations with filers and the guidance that you provide them. Before we conclude this how-to session, here are some quick reminders. So again, if you have any unfamiliar or challenging entries that you've seen this filing season, you can submit those to us for consideration at our next how-to session. You can do that through the end of this week, and that survey is on the bottom of the course page for our how-to sessions. The third and final how-to session is scheduled for Tuesday, March 10th from 1 to 2 p.m. I will be sending out more details for that soon. If you miss a session, if you missed today, if you missed the first one, these are recorded and they're made available on the course page in the IEG library. And also just a reminder that these how-to sessions are each eligible for Professional Ethics Practitioner or PEP credit. If you're working towards your PEP certificate for 2026, the new application will launch here soon in March, which is just around the corner. And if you have any questions about these how-to sessions, please do contact the Institute for Ethics in Government or the IEG here at OGE at trainingregistration@oge.gov. Thank you for joining us, and all the best to you and your teams as you continue to review your filer's annual OGE Form 450s this filing season.